The question of 2025 is Jake Claver going to be right about the carry trade unwinding in Japan? And will XRP be the savior, be the hero of the day? And that is what will cause XRP to go to $500 or $1,000 in a very short time. I wanted to take apart Jake Claver's theory. I wanted to give you some additional context and information live about updates of where we are right here at the end of September and how close we are maybe to some of these things actually coming true and happening. There's connections between SBI and the Bank of Japan. There's a CBDC. There's oil going through the roof. There's so many different things that have to play out perfectly in order for us to reap the benefits. But also, if we do reap the benefits, there will be a lot of people that are going to be hurt by this. I want to explore all of that. Let's go ahead and get into it. I first need to have Jake lay out his theory, and then I'm going to give you just a ton of information on top of this to catch you up with everything that's happening right now today, September 27th. Let's go.
$10 trillion ticking time bomb sitting inside the financial system, and almost nobody is talking about it. Unless you've been here on this channel, we've covered it lots of times. It's the reverse carry trade. And when it blows up, we're going to need something that doesn't exist in the current banking system. And that's where I think XRP might step in. This is about financial infrastructure, systemic risk, and why Japan, XRP, and the digital yen might be the only thing standing between global liquidity and a global crisis.
Spicy.
Okay, so if you haven't been here before, we're going to go ahead and go over what the reverse carry trade is. For decades, global institutions have been borrowing cheap yen at close to zero interest rates to buy higher yielding assets in dollars, euros, and other emerging markets. So they would borrow that yen from the Bank of Japan, swap it through FX to whatever currency they wanted, and then go put that to work, earning much higher returns. And then they owe 0% to the Bank of Japan. It's free money. And that is what the reverse carry trade is. It's close to $10 trillion in exposure. When rates shift or FX volatility spikes, these positions are going to unwind fast.
All right, really quickly, let me show you this. So here is the step-by-step breakdown of the unwinding. Investors decide to unwind their positions when market conditions shift, such as rising Japanese rates, falling foreign asset values, or increased market volatility. This decision often anticipates reduced profitability or increased risk compared to maintaining the position. Step 2, sell the Japanese yen bonds. The investor sells the Japanese yen bonds denominated in bonds, which could be domestic sovereign bonds or corporate foreign bonds purchased with borrowed yen. This liquidation usually takes place on the open market via a broker. Step 3 is to convert the proceedings to the original currency. Once the bonds are sold, the investor must convert the proceeds into the currency needed to settle the original financing or balancing of their portfolio. So if they use dollars or euros or pounds, whatever the currency is to start all of this, right? That is what they're going to need to pay all this back. This step is particularly relevant if the investment was funded using a carry trade, borrowing yen to buy higher yield foreign assets. The step 4 is repay yen loans or repatriate the funds. After the currency conversion, any borrowed yen used for the purchase, often leveraged via the carry trade, must be repaid. Institutional investors, including Japanese firms, may also repatriate the proceedings back to Japan, especially if domestic yields are rising. Step 5, market and portfolio adjustment. The selling and conversion process increases demand for yen, usually strengthening its value, and puts downward pressure on assets liquidated, often causing price declines or volatility in global markets. Let's get back to Jake here.
Investors will have to sell off their foreign assets and rush to buy back the yen. So they'll have to sell in the stock market or gold or wherever else they're positioned, swap back to whatever the currency it was in whatever jurisdiction they purchased it, and then go back through FX to yen before they can repay those notes. So this slams the FX market, the bond market, and credit globally.
All three.
All at once. So what's going to happen? It's not good, right?
Bad.
It's a tidal wave of capital surging back to Japan. Dollars, euros, and all of the other currencies that people are selling off to swap for the yen crash. And the yen will explode higher. Demand for the yen will be excessive. So US treasuries, they're going to be dumped. Yields are going to spike, and bond markets will break. Global liquidity will evaporate. Just
really quickly, bond markets will break. Everything is based around bond markets, right? If you're trying to get a home loan or your credit card, things like that, right? Those are based off long-term bonds. If those markets collapse, you are talking about the collapse of, let's say, the US dollar or whatever other currency or bond market that is collapsing, that currency is gonna go with it, right? And so if you have money in the bank in dollars and the bond market collapses, what do you think happens to your money? It becomes worth less and less and less. Since 2020, 25% of our buying power in the dollar has already been eroded, and that's just 5 years. Can you imagine what this would do to that additionally? Okay, just want to make sure everyone's clear on how bad this would be for everybody else not holding, let's say, XRP. If XRP is the saving grace here, obviously XRP holders would be just fine, but everybody else holding dollars and in the stock market and these other things, they would be financially in trouble.
It's like in March of 2020, but much, much worse. The Bank of Japan will have two options. They can either let the yen appreciate and kill their exports, or they can defend the bond market and risk hyperinflation because they're going to have to print a bunch of yen in order to buy those bonds. It's a lose-lose situation, unless they have a third option sitting in the background. So this is where I think XRP might be the missing piece. So instead of dumping foreign assets directly into the yen, flows could be routed from, let's say, US dollars through XRP and then into the Japanese yen. XRP would serve as a liquidity buffer, routing flows around the FX bottlenecks. Settles in 3 seconds, doesn't require correspondent banking, and it could scale globally if price and infrastructure allow it. So let's get into what would actually need to take place for this to happen. You got SBI and the Bank of Japan. They would have to have strategic alignment. Now we know SBI is Japan's largest and most aggressive fintech institution, and they own part of Ripple. So they operate SBI VC trading, and they also use XRP for live FX remittance. The Bank of Japan is developing SCBDC, which has been in pilot since late 2023, maybe 24. And this would allow them to program the stability of the bond market. But they would definitely need a playbook for this. You'd have to route FX through XRP. You'd have to be able to issue or go live with that digital yen. You'd have to offer yield or rewards for people holding the bonds, and then absorb capital inflows without destabilizing the yen or bonds.
Okay, let's just get into some of these connections that he's talking about here, okay? So he's talking about SBI and the Bank of Japan. So what are those actual connections? What do we know that is real that we can point to? SBI Holdings is directly linked to Ripple and XRP through direct investment, joint ventures, and infrastructure partnerships, while its historical operations ties to the Bank of Japan are visible through its banking subsidiaries and Japan's financial structure. There is strong evidence of SBI acting as a bridge between Japanese banking, fintech, and digital asset ecosystems, but direct policy-level Bank of Japan Ripple connections are not public. If the yen carry trade unwinds, SBI's provisioning of XRP liquidity infrastructure positions XRP as potential cross-border liquidity buffer, but regulatory option at the central bank level remains very speculative. We know about SBI, one of Ripple's largest equity holders, an extensive direct exposure to XRP. There's also this, SBI Shinsei Bank and Bank of Japan links. SBI Shinsei Bank, a key SBI subsidiary, is the successor to long-term credit Bank of Japan, also known as the LTCB, which was nationalized by the government after the 1990s asset crisis and originally had a government monopoly on long-term debt issuance. Shinsei played a central role in yen-denominated credit and liquidity provisioning, a direct legacy of the Bank of Japan's banking infrastructure. SBI's broader interest-based banking and fintech activities included tokenized deposit projects, positioning it in Japan's modern monetary system, often at the cutting edge of digital asset adoption. However, SBI Holdings operates as a fully private conglomerate, and while integrated with national finance infrastructure, does not act as a direct government or Bank of Japan mechanism. It also says Japanese carry trade unwind XRP liquidity buffer. The unwinding of Japan's yen carry trade, a process where investors liquidate bets placed with borrowed yen creates liquidity shocks that ripple across global financial markets as yen strengthens via policy tightening. At the Bank of Japan, institutions need alternate liquidity sources. SBI's infrastructure using Ripple's XRP for fast international payment and settlement theoretically offers an immediate, programmable cross-border liquidity solution that rivals traditional slow-moving banking rails. SBI's active management of XRP liquidity pools, as well in real-world transaction volume via RippleNet and XRP Ledger, suggests readiness to scale XRP use as liquidity buffer should volatility spike. So it looks like they have been preparing, and it looks like this is ready to go if need be. Let's get back to this.
Okay, so this is a tricky dance. It's not like it's an easy thing to do, but if you had a liquidity buffer like XRP that could expand and contract to be able to mitigate this risk and volatility, it's going to be much easier to handle this situation when it happens. So how could this work? Like XRP needs to have a couple things happen. For $5 to $10 trillion to be repatriated into the yen, you couldn't use traditional FX markets. They would break.
Sure.
You need XRP liquidity pools large enough to absorb and route those flows. So let's do some math. To absorb $10 trillion in 30 days with about 5.5 billion XRP, and if that was turned over 10 times daily, XRP would need to be around $180 per token. This is a mathematical inevitability if it's going to serve in this purpose. The world doesn't need XRP height, it needs XRP liquidity for when this is going to happen. So let's break it down. What are all the things that actually have to happen for SBI, the Bank of Japan, and the rest of the world for this to take place? The Bank of Japan would have to authorize XRP in settlement systems. Okay. And we know that they've been building that in the background with Ripple for a long time. So probably in place. SBI needs to build deep liquidity pools between the yen and XRP and USD XRP corridors using RippleNet or the AMMs on the XRPL, which were put out a while back with XLS30. So it's possible. You would also need regulatory clarity in Japan for XRP. It would need to be approved as a settlement asset and also not have capital gains if it's being used in that capacity.
All right. So I do have some information on liquidity pools in Japan, because that was one of the things that he just mentioned. Yes, SBI in Japan have been actively building up liquidity pools between the XRP and the yen, particularly through initiative banking products, exchange integration, and institutional initiatives. SBI Group launched SBI Hyper Deposit, a yen-denominated savings account that rewards users with XRP and integrates automatic transfers between banking and security accounts. This product is designed to streamline yen to XRP conversions and helps organically grow liquidity between the XRP and the Japanese yen within the retail and institutional user base. Also talks about institutional liquidity and holdings, because this is what we're talking about, right? What we need. SBI's exposure to XRP is immense. They reportedly hold about 1.6 trillion yen, 10 billion worth of XRP, exceeding their own market capitalization. As SBI runs validator nodes and operates SBI VC Trade, their licensed crypto exchange, this direct access helps build robust liquidity pools against Japanese XRP and Japanese yen trading settlement. Exactly what Jake was describing. FX remittance, a cross-border solution. SBI Remit and uses RippleNet and ODL for live remittances, converting yen to XRP. Then destination currencies such as Filipino peso, Thai baht, and V, which requires deep liquid pools between XRP and Japanese yen to facilitate near instant settlement. Let me know what this currency is below, dude. I apologize, guys. Market signal and initiatives. SBI strategy to reward retail depositors with XRP while integrating yen banking accounts with XRP access signals a push to mainstream fiat crypto liquidity. All right. And then one of the other things he said is, does XRP have regulatory clarity in Japan? That was also something that was important. Yes, XRP does have regulatory clarity as a settlement asset in Japan. So some of these things that he said that were needed to happen have happened. The only thing that I haven't seen is capital gains. What level of capital gains is assets like XRP in Japan? I think it's 20%, but let me just verify that. Let me get back to Jake and I will verify that in just a second.
We need CBDC rails to go live with programmable yield to absorb the bond flows. And again, we know that that's been in pilot for a long time, so likely they probably have that in place. You would also need global partners to mirror those corridors for all of the currencies that we're going to be swapping back to the yen. So that's the US, it's euros, and any other jurisdiction where people have borrowed yen to be able to put it into financial markets. And then last, XRP liquidity would need to be locked, incentivized, and scalable. So we need a significantly higher price for XRP for it to be able to facilitate this. And again, there's a lot of ways that could happen, but you need a supply shock on the asset. If we don't have something like this in place and $10 trillion unwind, you have a credit collapse. You have FX disorder, and you have central banks out of tools to fix this problem. So XRP is perfectly positioned for this. It's neutral, it's fast, it's ready, but it needs the adoption, liquidity, and price to fit this purpose. And again, this is not speculation. This is about the infrastructure. So SBI and the Bank of Japan have the pieces. Question is, will they move in time? XRP, it's potentially providing liquidity and a buffer when there is volatility and global crisis. And if Bank of Japan moves first, XRP won't just bridge currencies. It could be the bridge that pulls us out of the next global financial crisis.
All right. Few things here. Let's just go ahead and capital gains. At present, capital gains XRP are subject to progressive tax rate for individuals ranging from 5 to 10 for 45% plus 10% municipal. I think they did change this. Japan will implement a flat 20% crypto rate on capital gains. So that is the updated 20%. So I don't know if that fits what Jake was talking about here, but it is some information. Now, I do want to stress here, the central bankers are going to have some type of say here, right? It's not just like, oh, you know what, guys, we're giving up. We're letting the bond markets collapse. We're going to go home for the month, right? There are people actively I'd imagine there are hundreds, if not thousands of people actively working on this globally to prevent something like this from happening. Yes, XRP is well positioned to step in case traditional central bankers cannot get this fixed or done. We have been printing money to infinity. We keep kicking the can down the road, and the stress on the system is immense. So there is a possible way that this does roll out. The question is, does it roll out in the timeline that Jake has thought it would, which is before the end of the year or early quarter 1, 2026? Now, I did want to look at some other information, oil prices, because this does play another role in Jake's predictions. If oil spikes up, that could play a vital role in all of this too. So I wanted to take a look at where is oil today and what could cause the price of oil to spike. That is something I did want to know. And so Jake Claver's prediction, recent commentary on oil price impact with respect to the Bank of Japan centers around US dollar and Japanese yen exchange rate with the price of WTI crude priced in yen, not just dollars. While he hasn't specified a single trigger price, it is widely cited interviews the macro concern for Japan in the scenario, which would be a sudden spike in oil prices, especially denominated in a sharply depreciated yen, forces Japan to either rapidly tighten monetary policy or face surging import costs and capital flight. Generally, significant stress for Japan's external balance and currency stability is anticipated if oil pushes beyond historic prices upwards of $147 per barrel. So this is where we need to get to for oil, for all of this stuff to even for more of what Jake is predicting to happen. All right. It does talk about is certainly if the Brent approaches or surpasses 150, this exact threshold, many vary based on yen's value at the time, but analysts broadly agree a move toward 120 to 150 would put severe pressure on Japan. And so what could cause these severe price spikes for oil? Extreme oil prices spikes could be driven by several major events. One of those is large-scale geopolitical instability or war involving major oil producers such as the Middle East or Russia. We have seen Ukraine targeting Russian infrastructure for oil and gas over the last several months. I think there's like 21 to 25% of all refineries in Russia are taken offline right now. So that could be one of the catalysts that could send oil prices higher. Although there are a lot of countries that don't buy Russian oil, but there are a lot of countries that actually still do. Disruption of supply chains due to embargoes, sanctions, or infrastructure attacks. So there could be a war and a blockade or something like that. Strait of Hormuz. Sharp currency depreciation, as could happen in Japan's yen, weakens while oil is priced globally in dollars. Weather disasters severely impacting extraction, refining, or transportation capacity. Historically, spikes have occurred during wars, embargoes, and often supply fears spiral into full-scale panic buying. A combination of a weakening yen and higher global oil prices would multiply the pain for Japan. And so here's that information that I quoted you. Here is about Russian oil refineries pushed 20 to 25% of capacity offline, extended 1.5 to 2 million barrels per day of refined product. So this could play out even worse over the next few months for Russia. And what could that do to the rest of the market? I'm keeping a close eye on this. Here is Jake also giving an update here about when does he think this was going to happen? This was back in May 2025. Let me just play this.
When do you think the reverse carry trade is most likely going to happen? I think they need XRP futures in place, and I think they need the ETFs lined up. I think all the dominoes need to be in place. The stablecoin bill is there. It could be passed very quickly. Tether has already pretty much moved offshore, but they've been told that they will be subject to the stablecoin bill and the US regulations.
Now, one of Jake's predictions required the collapse basically of Tether and possibly Bitcoin and that value going into XRP. We're not seeing that happen. That is not going to happen. So you need to reevaluate a lot of what he's saying here, because that is a big piece. People were supposed to be dumping, Tether DPEGs, and then Bitcoin would start to crash. People would be taking money out of Bitcoin to go into XRP or go out of Tether into XRP. And that is just not going to happen with the recent news around Tether and was it UST1, right?
You've got MiCA in place. You've got the UK ready to go with their digital pound and the digital euro in the Eurozone. You've got all of these other large central banks ready to push their stablecoin and central bank digital currency, including the Bank of Japan. The Bank of Japan is ready to go with everything that they need. We're just waiting on oil to skyrocket. I don't know if that's going to come from a shortage or something that happens in the Middle East, but that will cause the Bank of Japan to have to hike interest rates very quickly, and everything will kick off. That's going to be the gunshot that I think is going to stir all this and make it happen. And it's going to happen way faster than people anticipate, because everything's lined up, ready to go for when they kick this deal off. So I think after the 19th here in May, I think that's the last piece that they need in place is the CME in order to be able to hedge and profit off of this. You've already got the XXRP ETF, which is a 2x leverage long futures XRP ETF. And then you've also got ProShares, which has launched their long and short XRP ETFs. No spot ETFs yet. I think all the institutions are on board. I think Jamie Dimon and Chase and JP Morgan are on board. I think HSBC, I think the BIS, I think the IMF, I think the Fed, I think the Treasury, I think the US, I think the BRICS nations. Everybody is green light, ready to go.
All right. And then also, Jake had this other clip here. Why would banks risk trillions on untested networks? So a lot of people say, why XRP? There's all of these other assets now, right? You see like Swift and Lydia working together on a messaging thing. Why XRP? And I think this kind of finishes off this entire video. I thought this was a great explanation. Let me play it.
I think that there's too many imminent global catalysts that are going to cause supply shocks and the need for instant settlement on the back end of the stock market and other markets. And you got to have an asset that's able to facilitate that. Really not anything else out there that's been vetted, tested, integrated, all the other components. There are other networks that are better than the XRPL. I'll say that. The Holochain has a higher throughput. Hedera has a higher throughput and security. There are some assets out there. However, my challenge to that would be, how long have they been around? Hedera has been around since 2018. That's when their ICO was. I don't know when Holochains was. There's many other assets. The deal is these banks have been trialing XRP for more than a decade. And that's how long it takes them to get comfortable with something. They need to for sure know that there's not going to be any problems, that this is going to be the backbone and the infrastructure of the financial system. Like, it can't go down. It can't be like Solana. There have been times in the past 6 months where the XRPL has paused for 5-10 minutes. Okay. But it didn't go down. I would rather something pause, make sure everything's good. And
it's a security, if something happens on the XRP ledger, it's designed to pause why that is fixed or that is done. It's not a big deal.
And then work itself out rather than collapse on itself and shut off and have to restart and do all the stuff on the back end, right? All that to say, the most trialed, tested network, period, hands down, that's not ever had any issues, is the XRPL. And that's the one reason that I think banks will end up inevitably going with that blockchain over the other ones.
All right. So where does this leave us? Okay. You got a complete update of where all of this stuff is as far as Japan goes. But remember, right? If this actually plays out the way Jake says it will, it'll bring immense pain and economic harm to every country intertwined and affected with it, starting with the US, Britain, China. Think about this. If Japan has to start selling, Japan is the highest holder of US debt, okay? If they have to start selling US bonds, you think China and the UK and everybody else holding US bonds is going to hold on to those as Japan dumps on a fire sale? Everybody will start dumping US bonds, and that will be the end of the US dollar, right? That is pretty scary, especially if you live in the US. The US dollar has been the reason you probably have had a better life than most people around the world. If that goes away, what comes next? And I think this is why people are more open to investing into these digital assets, because they're tired of their value, the dollar value devaluing. They're tired of inflation. They're tired of central banks printing money to infinity. They're tired of governments having their finger on whatever. Owning a piece of the new financial system might be the only way to save ourselves from total damnation of all of these systems collapsing in on itself. And that's where a great reset could come into play. That is where the new financial system, the new rails that have been built out for the last 10 to 15 years are ready to go. They're ready to take over the liquidity. They're ready to take over the transfers and the movement of money. How does this all play out? How will you be affected? You need to start looking at your life, where things are positioned. Talk with a financial advisor about this. Make sure that they understand all of this, right? Because there's no point of going to have a conversation with a financial advisor that understands nothing about digital assets. So go make sure you talk to somebody that knows what they're doing and knows what they're talking about, because that is a very important piece. Jay Claver, very smart guy, knows a ton of things. Just wanted to give you an update on kind of how I'm looking at all of this, because I know you are paying attention to this closely as well. And I hope this was a great update. If you got value, guys, you can like the video, you can share the video,
please
you
share
can leave a comment down below.
There is value here
appreciate
for
you.
you.
I hope you have a blessed day. Take care of yourself. Aloha.